If you don't have a Binance account yet, I've got a lot of tutorials going through the setup process, how to get everything done. So you can check out those in the description as well. We're going to come right into our margin trading dashboard. Now, there's two ways to get to margin trading. The first is to go up to here to trade and then click on margin. That's going to take you right through into the actual trading screen. But first, I'm going to go into our dashboard. So we come up to wallet and then we can come into our margin wallet. So we can click this and our dashboard comes up here. So before we get into the margin dashboard overview, what exactly is margin and what do all these things here actually mean? Well, when you use margin, what you do is literally borrow money from your broker. So your broker, in this case Binance, will actually lend you a certain amount of money on top of the amount of money you put in. So let's say you put $1,000 in, you're going to be given money from Binance. And actually there's two types of margin that you can get: cross and isolated margin. Binance will actually give you extra cash on top of your deposit so that you can go ahead and trade. So first we have our total balance. Now what this is it takes the deposit that you have on account, also all of the margin that you have that Binance has given you, and then all of your trading positions. If you're on a profit, this is going to be going up. And when you're down, obviously this total balance, that's everything you have, will be coming down. The total amount of debt that you have is simply the amount that you're borrowing from Binance. This will change depending on how much cash you actually put in. You can borrow more or you can put more of your own cash in to change this balance. When we come to account equity, you can see account equity is your total balance minus your total debt. This will change depending on if you're in a profit or loss in your positions. And then your total margin level is really important to understand. This will be a level and Binance will give you a number. Really important is that if you get to a level of 1.3, that is when Binance will start giving you what's called a margin call. This is literally just a message from Binance saying, hey, you don't have that much cash on account. We've lent you loads of money and we possibly might be starting to liquidate some of your positions so that we can be sure you can actually pay us back. If this level gets to 1.1 right here, this is when Binance will liquidate all of your positions and sell them all out, because 1.1 essentially means that you don't have any assets on account to actually pay for the money that you've borrowed. Coming to your profit and loss, this is just simply how much you've made or lost on the day depending on your open positions. So now that we know that, we can come to cross versus isolated margin. What's the difference? Well, firstly, cross margin simply means that the margin that you get or the money that Binance give you to trade with, this is across all of your positions, and we can see all of the different cryptocurrencies we can trade right here. We can open positions in a lot of different cryptocurrencies, and Binance will give us money to do that. With cross margin, let's say you get $1,000 of margin. You have to fund that $1,000 across all of the different positions that you have. Isolated margin is different though. You can see with cross, we get about 3 times margin. So if you put $1,000 in, Binance will give you $2,000 to bring you up to $3,000. We can see that cross margin can be used across all of these different cryptocurrencies and positions at 3 times. When I switch to isolated though, you'll see that the assets change right here. This is because isolated margin is done per currency pair. When you borrow in isolated margin, you're simply borrowing on one currency pair that you're trading. So the amount that you borrow is simply on that currency pair, and your borrowed cash can't be used for other positions. There are a good amount of supported cryptocurrencies here, you'll see a lot, but once you borrow, you're borrowing on that currency pair only, and you can fund and trade that currency pair. And you can see that the amount of isolated margin changes. Sometimes it's 5 times margin, and if you have a much bigger currency pair like ADA and Bitcoin, they can give you up to 10 times. So that's the difference between cross margin and isolated margin. Most beginners will go for cross margin. Most people will trade with cross margin simply because they want an amount of cash to go and trade with and to use across any currency pair that they want to trade. Let's come though to borrow and repay. So you can see each currency right here has a list of different options, and you can transfer, borrow and repay. Let's first come to borrow and repay. This means that we can actually go ahead and put a cryptocurrency or an asset on account to go and borrow money against. Each currency might have a different interest rate. So you can see Bitcoin is obviously the most popular. If you have some Bitcoin, you can then deposit these on account and then borrow some cash off of that. Here is the hourly interest rate. So as soon as you put assets into your margin account, Binance will start charging you interest on the money that they lend you. Remember, with margin, this is literally Binance giving us money, and no one gives you money for free. So if you do have assets on account to borrow against, you'll still be paying an interest rate for the money that they lend. you can go and deposit Bitcoin on account and they will lend you more. So right down here, you can see that the amount we have available is none. Now you can go and deposit some Bitcoin in, and let's say you had $1,000 of Bitcoin, you can then borrow against that amount. So 25%, 50% of the Bitcoin you have on account, you can go and confirm the borrow, and then you'll get extra assets in your account. Now, if you ever want to pay off some of your margin and some of your loan, you can definitely come over to repay. You can see that I haven't borrowed any Bitcoin yet, but if I did have an outstanding balance and Bitcoin lent to me by Binance, I could come and enter the amount that I want to actually put into the account to pay back, click on confirm repayment, and then what will happen is the amount of margin you have on account will decrease because you're funding more of those positions. You can do this for a variety of cryptocurrencies. Just click here. You can do it with all of these supported currencies, and a lot of people will do it with US dollar Tether. It's a very easy way to have some USDT on account, and then you can go and trade that margin across a load of other different cryptos. Transferring in is a simple transfer, so you can click on transfer. If you have any assets in your fiat and spot account, as you can see here, just transfer those from your fiat and spot and then put that either into your cross margin or the other wallets that you have. Let's choose cross margin. Let's choose the coin. So I'm just going to put USDT. So I can click this. You can see I've got some USDT in my fiat and spot account. I can go to max and then actually confirm that and send it right over into my margin account. I'm not going to do that for now because, like I said, as soon as you put some assets in your margin account, you'll actually be charged interest if you go ahead and borrow against them. That's an overview of how to get assets in your margin account and what margin trading is. Let's go through to the trading screen. We can come down to one of the assets right here and just click on trade. Very easy. And then you can open up a specific trading pair. So Bitcoin, US dollar Tether would be a very popular one, or you can just come up here, like I said, and go to margin. But let's just click on this one. We'll go right through to the trading screen and we can see Bitcoin against US dollar Tether. And a difference here is that we're actually trading on margin right now. You can see that up here, cross 3 times. So we know we are trading that cross margin account with 3 times leverage. We can change that to isolated 10 if we wish, or we can go right back to spot trading, which means that that is our spot account and we won't be borrowing any funds. Because I've used the margin trading account before, the quiz doesn't pop up for me, but here's what it looks like. Before you start trading margin for the first time, you will have to answer these questions and make sure that you get everything correct. Once you've taken the quiz though, we can come right into trading on margin, and it's exactly the same as trading in the spot market. The types of orders that you'll use are exactly the same, but we can come down to here and either choose normal, borrow, or repay. Normal is not trading on margin, and you'll see buy BTC. We can just go ahead and buy that. Now when you borrow, we'll click on borrow and you can see it changes to margin buy BTC. So right now we would be trading with some borrowed margin from Binance, and then repay right here, it changes back to buy BTC. If you have margin or borrowed money on account and you want to pay it back by putting some Bitcoin into your margin account, click on repay, buy a certain amount of Bitcoin, and then you'll be reducing the margin that you have. We'll go through and borrow some and trade on margin right now. So what's really great is that you have a calculator in the margin account. So we'll click on this icon right here and it will bring up this calculator to give us an idea of how the margin will affect us. So right now the price of Bitcoin is 49,827. Let's say that we make a loss in this trade and we actually get out at 48,000. Let's say we want to go long on some margin and we have a stop loss in there. When we're day trading, we always want to put a stop loss. We actually make a little bit of a loss. We get stopped out on that trade. So let's say that we had $1,000 on account and we borrowed $2,000. So that is actually our 3 times margin. We can calculate that. We can see that the P&L is a minus $100 and we make an 11% loss. If you actually borrowed less money, so let's say you only borrowed $500, we can calculate that again. You can see our loss is definitely lower here, only 5%. Why is that? Well, our position is smaller and we're borrowing less. That means that our profits and losses aren't exaggerated as much as if we were borrowing lots of money from Binance. So if I put a crazy amount in here, you'll see we'll lose a huge amount because it takes the amount that we're losing and multiplies it by a huge amount of borrowed money, which makes our position much larger than our original cash amount. We can also come over to target price right here and do the same calculation. Let's say our entry price is 49,907 and we want to make a 5% return, and the original amount that we have is $1,000 and we borrowed $1,000. We can click calculate right here. This is the price that we would need to make a 5% return, 51,155. If we borrowed less money, so let's say we only borrowed $100, you'll see that the target price goes up. That's because our overall position is smaller, we've borrowed less money, and so we definitely need a larger price rise in comparison to our original amount, this $1,000 to get that 5% return. If we change the borrow amount to a crazy amount like 50,000 right here and calculate, we only need a tiny price movement to have a massive effect on our overall position. Coming over to liquidation price right here, we have our entry price and then the amount of Bitcoin, let's say 0.05, and let's say our balance is 1,000. We can then click on calculate right here. You can see that the liquidation price is absolutely miles away from our entry price at 50,000. This is because 0.05 of a Bitcoin doesn't actually take that much more than the balance that we have on account. So we're not borrowing that much. If I change the balance to, let's say 10, so we only have $10 on account, but we borrow lots of money from Binance to actually fund a position of 0.05 of a Bitcoin, you'll see that this liquidation price moves much, much closer and is actually above our entry price. This essentially means that we're borrowing so much money from Binance right now that our position would be liquidated straight away. Now let's get on to entering a simple trade onto Binance using margin. When trading on margin or with borrowed funds, a lot of traders will use some simple risk management techniques in their trades. So for example, a lot of traders will actually use something called the ATR to put in stop losses. The ATR is known as the average true range. So I'll just pop this up here. It is a technical indicator that shows us how volatile an asset may be. It will show us a price, and that could be the largest probable one-day move in the asset. And a lot of people use this to put their stop loss in place. We can come back to our chart then, and I've got ATR on the chart right here. You can actually come up to your indicators. So put technical indicator and then search ATR, and you can put it on your chart right here. And this is it. Now for Bitcoin, the ATR right now is around about 4,000. We can use this as a stop loss then. So that is the biggest one-day move that is probable according to this indicator. Let's say the price of Bitcoin right now is around 50,000. So 50,000 minus 4,000, that is where you'd place your stop loss if you were day trading. There are many different indicators that could suggest a possible stop loss for us. This is just one that you may want to use. Also, traders will often limit their positions to just a 2% risk of their overall position. This may sound quite complicated, but now that we know the price of Bitcoin, let's say we go long here at, let's say 50,000, and we also know our ATR now, which is 4,000, we can make a simple calculation to know how much risk and how big our position could be. I'm going to come to a position size calculator. You can come to Cashback Forex to use this one, but it will just tell you exactly how big your position can be. So we've got Bitcoin against US dollar as the currency pair. We'll value this in US dollar. Then we have the opening price. It actually has it for us, but let's make it easy and just say that it's 50,000. We also know that the ATR at the moment is 4,000. So our stop price could be 46,000. And we also know that our account balance overall is 3,000. Let's say we put $1,000 in and we got 3 times margin. So our overall balance is 3,000. We don't want to risk more than 2% of our balance because remember, we are trading on margin with more cash than we actually have. Then we can go and calculate this. So what's really great now is that we know we can trade 0.015 of a Bitcoin and our money at risk is only $60, which is 2% of our position. You don't have to follow this exactly. If you want to take more or less risk, just change it here. If you want to double up your risk, we'll have $120 at risk and we'll trade 0.03 of a Bitcoin. If you want to take less risk, just change this here, 1%. Now we can trade this much Bitcoin. Remember though that this risk in particular is the risk of your overall trading account and not of the original 1,000. Remember, we are tripling the amount of money that we have and therefore tripling the amount of risk that we take on our original balance. This 2% risk then is more like a 6% risk on our original balance, and a 4% risk is actually more like a 12% risk on the original $1,000 that we put on account. Now that we know all of the different risks that we're taking, we can simply come back to the Binance trading page and we'll put in an order. So we can go 50,000. Let's say we go long at 50,000. We want to take a 2% risk. So how much Bitcoin do we actually have to use? We can come back to the calculator very easily, use that 2% risk, and we know it's 0.015 of a Bitcoin. So we can put that right in, 0.015. We can see the total amount is 750 and we can borrow on this as well. As long as you have assets on account, you can go and borrow. If you do have assets on account to borrow against, click on margin buy and that limit order will be input for you. Once you have your buy order and limit in place and you've gone through and borrowed that on your margin, we obviously need to put our stop loss in place. So we come over to sell like this, and then we change to stop limit. This is essentially a stop loss order for us. So make sure that we use the ATR, which is 4,000. So that would be 46,000, 50 minus 4,000. Our limit price, we can also change to 46,000. We're telling Binance that we want to sell at 46, put in that order for us at 46, and sell with a limit of 46. We need to make sure that we're trading the exact same amount of Bitcoin so that we sell out our position and close it off, so 0.015. You can see that total amount, definitely less than the buy order that we placed, so that is our stop loss, selling us out of a losing position. You can see it switched to repay here, also really important. You don't want to borrow more, you want to repay that long that you had with the margin. And that would be a long position with a stop loss in place when you're day trading. You don't have to put in stop losses though. If you just want to margin and go long for the long haul, this would be the calculation. If you're not day trading, then it doesn't really matter what the price is. Essentially right here, 33% as you can see. If you go long with $1,000 and you margin up 3 times your money, then essentially the price of Bitcoin can fall 30%. But if it does, then you will be completely liquidated. So as you can see from my trading account, I actually don't use margin. I just don't think that margin is necessary for me considering the volatility of cryptocurrencies anyway. However, the option is there in Binance if you are looking to trade on margin and leverage up your trades. If you don't have an account with Binance yet, click the link in the description to go through and sign up. Also, if you need way more detail about trading cryptocurrency, check out the Ultimate Crypto Trading course that I have on the channel. That will go way more in depth into a lot of the different order types and some more trading strategies. Subscribe for daily helpful crypto content, and I'll see you in the next one.